Welcome to The Explainer. Today, we're diving deep into the LLC playbook, and we're going way beyond just basic asset protection. We're going to show you how to engineer this simple legal structure into a powerful engine for tax savings and, yes, generational wealth.
So let me ask you a question. Is your LLC secretly costing you thousands in hidden taxes every year? You know, so many entrepreneurs set up an LLC for liability protection and then they just stop. But that is a major blind spot, and it could be creating a massive tax bill. You've got to see your LLC not as the finish line, but as the starting point.
Okay, let's get right into it. At level 1, the standard LLC. This is the foundation for most businesses. It's where everybody starts. But it comes with one really significant financial drawback that we need to tackle right away. At its core, an LLC creates what's called a corporate veil. Just think of it like a legal firewall between your business life and your personal life. If the business ever gets into trouble, your personal assets, your home, your savings are shielded. It's an absolutely critical first step. But here's the catch. Here is the trap. By default, an LLC is a pass-through entity. Now, all that means is the profits pass through the business directly onto your personal tax return, and that's where you get hit. Every single dollar of profit is subject to a hefty 15.3% self-employment tax. As you grow, this becomes a massive financial drain. So, now for the solution. Let's move to level 2 and talk about our first major strategic upgrade. This is exactly how we solve that self-employment tax problem, using a simple yet incredibly powerful IRS election. According to expert analysis, there's a key financial trigger point here. Once your business's net profit consistently crosses that $50,000 mark, it's time to get serious about making an S-Corp election. This is the point where the tax savings start to dramatically outweigh any administrative effort. And this is one of the most powerful yet commonly misunderstood strategies out there. Let's be really clear. You are not forming a new company. You're simply filing a form with the IRS to change how your existing LLC is taxed. It's like upgrading your financial operating system. So how does this actually work? Well, with an S-Corp election, you get to strategically split your income into 2 different buckets. First, you pay yourself a reasonable salary for the actual work you do. This salary has to be defensible, right? It has to be in line with industry standards because the IRS does pay attention. Then, all the rest of the profits, you can take those as distributions. And the difference is just staggering. Look at that bottom row. With a standard LLC, the entire $100,000 is hit with that 15.3% tax. But as an S-Corp, only the $30,000 salary is. The other $70,000 in distributions is exempt from that specific tax. The savings are immediate and they are substantial. Okay, so now your tax efficiency is dramatically improved. So we move to level 3. This is all about superior asset protection. And the core principle here is simple, but it's profound. You have to separate what your business does from what your business owns. To do this, experts use a powerful visual model they call the T formation. Think of it like a blueprint for your entire financial world, specifically designed to create a clear and robust separation between your high-risk activities and your high-value assets. The T formation has 2 main branches. On one side, you have your operational LLC. This is your active, public-facing business. It deals with customers, it has employees, it carries risk. And on the other side, your asset-holding LLC. It does nothing but quietly own valuable assets like real estate or investments. One side does, the other side owns. And the benefit here is crystal clear. If your day-to-day business on the left gets sued, the lawsuit is contained right there. The valuable assets held in your separate holding company on the right are shielded and protected from that legal action. This simple separation is the foundation of a true asset fortress. All right, level 4 is where we bring it all together. This is the advanced playbook. We're going to integrate all the pieces we've talked about into one complete, sophisticated system designed for managing and growing multi-generational wealth. A key piece here is the management company. Now, this is a separate LLC that provides services like bookkeeping or marketing to your other companies. So for example, your holding company can pay the management company a fee for its services. This centralizes your costs and creates some really powerful ways to strategically move income and plan for taxes across your entire structure. And here, at the very base of the structure, sits the final, most crucial piece, a trust. This is the master tool for estate planning. By having the trust own your various LLCs, you ensure that this entire financial engine you've built can pass seamlessly to the next generation, avoiding probate and completing your legacy plan. Ultimately, this whole journey represents a fundamental shift in your mindset. It's about evolving from being just a business owner to becoming the architect of your own financial future. You see, your business structure shouldn't be some static document that you file and then forget about in a drawer somewhere. Think of it as a dynamic structure. You can actively engineer these pieces, the LLC, the S-Corp election, the holding companies, the trusts, into a cohesive structure that's optimized for your unique goals. By moving through these levels, from a basic shield to a tax-saving S-Corp to a fully protected asset fortress, you transform a simple legal document into an engine for building and preserving wealth. So the question isn't if it can be done, but are you ready to be the architect?